This red line here is the growth since 2008 from the UK platforms. And this blue line here is the growth of the Eurozone, mainly Eurozone. I suppose Sweden's not in the Eurozone, but Eurozone platforms. And you can see the UK has absolutely shot up there. But of course, the cynic in me would suggest that now that it's doing that well, it's going to have a real problem maintaining that growth rate, whereas it's the Eurozone platforms, it's the Eurozones plus associated countries, that is really, really going to take off. And that's why this debate now is so interesting. And we have here probably all of the most interesting platforms throughout Europe, and one from North America, from Canada as well, our Anglo-Saxon cousins, Andrew. And we're going to look a little bit at each of these platforms and their individual markets. And because there's no room for me to sit down, I don't mind if I'm going to stand over here. So let's first start off with Lendico and Dominic. I want to go through each one of you and understand, simple answer to the question really, what's the single most interesting market at the moment in the areas you're looking at, and who are you lending to? Dominic.
That's a difficult question to answer, really, because it depends on from which direction you're looking at. Yeah? If you're looking from a volume perspective, I think Germany is still the most attractive market to us. If we're looking from a lender perspective, it's probably more towards the emerging market side, like South Africa probably at the moment.
Oh, fascinating. South Africa. And interesting enough, just in South Africa, what kind of margins are you getting? Well, margins you won't tell me, but what kind of yields are you getting on your South African book?
So the net yields to investors after defaults in the last year have been around 8 to 10%.
Okay, very interesting. Very interesting. Very developed market for emerging markets. Okay, Matthias, ZenCap. You're also both of you are part of the Rocket stable, aren't you? And we should explain, those of you who don't know, Rocket is a prolific launcher of platforms in this space. And so, Matthias, again, for ZenCap, you're SME focused. Where are you finding most of your business? What's the most interesting opportunity, the sweet spot for you guys?
I think I'd answer it pretty similar to Dominic, right? Germany is an incredibly large market. Actually, the market in terms of outstanding SME volume and new issuance of SME loans actually double the size than the UK, which means we have a tremendous market opportunity in terms of depth of the market. However, yields are, of course, a lot lower. So if you take a look at the yield opportunities, I think you need to go to the peripheral European economies like Spain, for example, right? In Spain, we can easily charge like double-digit returns. And after losses and after fees, you're easily looking at 8, 8.5%, 9%.
And so risk-adjusted returns, once you actually factor in defaults, is it still in double digits?
I think after we didn't have any losses so far, right, in Spain. So, however, I'd guesstimate, and depending on the market figures we have, it will be somewhere between 8 and 10%.
Cedric, I'm guessing you might well be focused on short-term funding in sort of France, but is that really the sweet spot for you?
In terms of market, I mean, obviously Phoenix Cap is a receivables financing platform, so I'm looking really at short-term financing, that's sure. But one thing for us that was really key was trying to get to the appropriate cost of capital. I mean, something that I think was really striking is you still serve a lot of money, and actually the numbers that you give in terms of return, for me, are really high. If I want to finance a company in France,
high is high?
It's definitely too high. I can't actually, do my business if I have, investors requesting 8 to 10%, because factoring in France is very, very cheap. So one thing that for us was key is trying to tap the market. You made the point in the last panel. Tap the market where you have excess cash, that it's not looking for yields, that it's just looking for something in a zero environment, zero rate environment. So 80% of my refinancing is really 2% on an annual basis, but it's very short term, liquid, no credit risk. And that attracts obviously, excess cash that corporates have, or institutional. And then 20% is really 7.5%. I mean, my product is a securitization fund, so it's, it's not something that is volatile. That does have, a fixed income. And here, you have all probably the people that were, last panel as well, that, are interested in this.
Yeah, absolutely. Jonathan, again, where's the sweet spot for you at the moment? What's the one particular market, product set, and yield that you're getting your money on?
Well, we're a Spanish business, so we've launched into what we think the sweet spot is, which is relatively short-term working capital lending to SMEs. But we've seen the market change quite a lot over the last 18 months since we've been operating. It's a very conservative market, certainly from the investor side. In fact, we can put a loan in our marketplace at a B+ rating at a 6% and one at a 7.5%, and often they'll go for the lower yield one over the high yield one because they perceive yield to be directly related with risk, whereas actually it's quite in perfect markets. So you do get quite a lot of disparity between lending rates, even at the same risk level.
Oh, right, okay.
So
you can effectively arbitrage the risk.
Yeah, there's many opportunities from that side. But certainly on the SME borrowing side, the short-term working capital the demand from SMEs is huge. And it's still very much saturated by bank lending, and the banks aren't really servicing the market. So that's where we see the opportunity to be. Now, there's both. We actually also provide working capital in the form of discounting on a type of trade receivable called a pagade, which is a bit like a post-dated check, as well as just normal term loans, as well as credit lines. Right. Okay. No, interesting. So we try and cover the spectrum.
Andrew, I'm going to have you as a kind of token European here. Actually, you've got Quebec, so Canada, which is almost European.
That's true.
So where's your sweet spot in Canada? Particular market set? What could you expect in terms of yield?
I mean, I think Canada in many ways is sort of the forgotten market in the space, or has been, and we see a big opportunity to exploit it. I was sitting at a table and someone mentioned that there's 59 different platforms in the UK alone.
I was about to say, I think it's more than that.
Well, maybe it is even more than that now. In Canada, it's in the single digits.
How many?
And I would say it's in the single digits, depending how broadly you sort of what you consider to be a platform. And Canada's a great market. There's $75 billion in credit card debt, which is one measure of the market size. 35 million people. And like the US, there's high credit card usage, but even higher repayment rates. So default rates in Canada for almost any kind of debt are lower than in the United States. So it's sort of funny, and I think a result of some hangover from a regulatory perspective, that there hasn't been more development. We see a big opportunity to tackle the Canadian market.
And what precisely would you think is the best sweet spot for it? Is it consumers? Is it business? Duration? Yield?
Yeah, so we're starting with a product similar to what others on the stage and others in the audience have done. So sort of prime consumer lending, targeting a net return to investors of 7 to 10%.
Okay.
So what many of you would recognize as what's now common in other parts of the world.
That's very interesting. Martin, left the best to last. So Martin, you've just merged with TrustBuddy, but you're part of the TrustBuddy group now, is that right?
Yes, we did.
Which is publicly listed in the AltFi index. And the Dutch market, I was surprised. I was talking to Sebastian from TrustBuddy a while ago, and I was surprised how advanced the Dutch market is. So, and you operate beyond there, but talk us through, what's the sweet spot in your market?
Well, you see, in the Netherlands is probably one of the most developed countries when it comes to crowdfunding, right after the UK. Our sweet spot, our personal sweet spot, is that we make a combination between both consumer lending as well as SME lending. To be honest, our sweet spot is SME lending.
SME, yeah.
You can see a rapid development in the Dutch market over the last few years. And, well, we're following the line you showed earlier, actually.
Yeah.
And you see the development in the UK was like this, and you see in the Netherlands we're a few years behind, but we're getting there. And the development over the last few years was like crazy.
So what transactions have you done to date, just so people can get a sense of how big you are?
We funded for approximately 52 million euros.
Quite a big number.
Yeah. And with this amount of money, we are the market leader in the Netherlands. But there's so much more potential out there, especially when you see the banks are not willing to provide the SME with small loans, and we provide loans for about 250,000, 400,000 euros, 500,000 euros. Those are the loans which are not quite interesting for the banks. And actually you see a change of behavior with the big banks as well. When we started off in 2011, you saw the big banks look at us, and they thought it would just be a hype. But nowadays they are coming to us in order to make some cooperation.
So working with the banks.
So not working against the bank, but to cooperate with them. And I think that's the next step, bringing that to the next level.
Now that's very interesting. That's interesting for all of you. I'll just open it up for debate here. I mean, is the growth of the market taking on the banks, or is it actually devising your own non-bank model that says, actually, no, we're going to cut those guys out. We're not going to work with them. What do you think, guys think? I'd be interested in any of your views. Just chime up.
I mean, I'm happy to start. We've in Canada, peer-to-peer is very challenging from a regulatory perspective, so we really are a marketplace lender.
Okay.
And we've gone to market with a mid-sized bank that is about $12 billion in assets as one of our partners.
And that's not unusual even in the US as well, because there are banks pretty enamored. Okay.
Well, I think for us it's both, right? In Germany, we need a bank to operate the business.
Okay. So you have to.
Of course, we need to partner with the bank. However, in terms of the market, if we take away share from the banks or if we grow the pie, I think it's actually both. When you look at the low yield, low return side, we are really competing with the banks, right? And we're taking away some of their business. However, on the more high yield and high risk side, it's definitely some of the SME customers which were just rejected by the banks. And this is where we actually can grow the pie and actually add additional services.
Yeah, no, we're seeing the same in Spain. 18 months ago, we were very much in a segment, risk segment that you'd typically consider to be where the banks would be. And we were lending to pretty big businesses that weren't necessarily what you consider to be SMEs, much more the top end of the medium than the smaller ones. But as the sector matures, as the banks recover from where they've been in Spain, which is taking them a bit longer than in other European countries, we're finding ourselves having to really locate where we sit within the risk-return spectrum.
So they're coming back into the market and pushing you down in the SME ladder, in a sense, for the size of business.
There's increasing liquidity at the larger end of the medium-sized companies. So whereas before we were seeing quite attractive yields there for our clients, now we're moving slightly into the higher yield segment.
Is that, Cedric and Dominique, is that the same with you guys? I mean, France, you're up against the banks. You're up against, anyway, in the sort of short-term funding market, same, Dominic? Yes. I mean, the banks in Germany have been much more progressive in lending to businesses than they certainly perhaps been in the UK.
No, for sure, yeah, it's a good point. I mean, just to put the picture actually on the table, in France, you need to be a bank, same as you explained, you need to be a bank if you want to buy invoices as a profession. So I just needed to get around that. So, I got an asset investment management company, basically, which is in-house, that, manages.
So you effectively run a fund?
Yeah, I'm actually an investment fund manager. I'm licensed to operate that. But to get down to the question, I think, you see the wrong picture if you think that we're just competing with banks. I mean, it's the beauty of the market is, to give you a number, I mean, in France, 38,000 companies have factoring services. The market for Phoenix Cap is about 600,000 companies. For what? Many reasons, but one of which is that when you target SMEs, and especially for, really small amount of financing, the bank model doesn't work out. It costs too much money actually to get there. The credit analysis is very much qualitative and less quantitative. I mean, when you're looking at a business owner, actually, it's that guy or that woman actually that is important in your credit risk decision. It's not the fact that the balance sheet is saying X and Y, and that the profit and loss, you can analyze this. And its beauty is that you need to set up your own product in a market that is even larger than what you can imagine. It's a difficulty at the same time because you need to evangelize. You need to make people be aware
of it.
Yeah,
absolutely.
Exactly. I mean, my clients actually don't even know that transforming invoices into cash is a way to get financing. They don't even know that. So I need to explain it, and then to convince them that it's going to be the right product.
Dominic, again, with you, I mean, are you competing against the banks, or are you going to try and be like them?
It really depends on the customer segment. So for the customers that could also get a credit at the bank in Germany, you're competing with the banks in terms of convenience of your product and the price you offer to them. But what we also do is kind of broaden the pie, what Matthias said, to customers that are not actively served by the bank. So we provide them access to credit which they couldn't get. Yeah? On the investor side, actually, we closely cooperate with the banks. In Germany, 2 banks invest through our platform into consumer loans because it just provides them a more efficient way to write business on their balance sheet.
One very last question, which I'll give a quick answer because we're slightly run out of time. Start with you, Martin. Is the future more cross-border? You're big in Holland, but in the Netherlands, a part of a company that is actually Swedish-based. Is the future actually in lending across different boundaries, or is it more localized and specific? A short answer?
Depends on the development of European legislation. Because right now all the different countries have different rules. Okay. So you have to, you need to have some uniformization on that one, and then it will go cross-border.
But not at the moment.
Within a year or 2, I guess.
Year or 2. Slightly different, obviously, you're not in the Eurozone. But again, can you lend into the US market, and likewise?
Like I think we're seeing, and we will continue to see, sort of the internationalization of the sources of capital. So funds that are, investing in platforms in different markets. I think for us, the experience has been in our market, getting your head around regulations, getting certified, all the sorts of things you have to do takes a lot of time and energy. And, it makes this kind of product harder to take to other markets than other kinds of technology.
So quite specific in Canada. John, what about you? Outside of Spain?
Yeah, absolutely. I mean, there's two dynamics here for me. One is the fact that, for me, these businesses are businesses. To succeed, they need to scale. And to scale, then, of course, you need to look outside of your domestic market. And the other point being that, of course, in Europe, assuming the European Union works in the way it should do, we should have a harmonized regulation across the board, and in which case it'll make it easier for us.
And I'm guessing with you guys at DN, you already lend across Europe anyway, don't you? So I'm guessing you do think the future is in cross-border.
We at Atlantico, we're a strong believer in cross-border. We think if you want to be successful, you have to think P2P on a global basis, because even though the borrower is local, the investor money, it's global, and we want to provide them a single point of entry and kind of standardized credit processes all across the globe.
I'm going to have to finish there because we've run out of time, but these guys are now heading into that room over there as those other sets of people come out. This is a great group of people to talk to about all those opportunities in Europe. So if you want to listen to a bit more about the specific opportunities in the European market, head over to that room. In the meantime, put your hands together for our panel. Thank you very much. Thank you very much. Thank you.